dynamic changes is technology. The financial market institution of the future is one that is currently making conscious effort to automate its processes by leveraging on relevant technology. Fintech can be useful in the following ways. Core market infrastructure, which will involve developing efficient and intelligent platforms for trading and clearing. Post-trade digitalization, automating the heavily manual processes that still exist in compliance and regulatory and securities lending. Artificial intelligence and analytics also develop solutions that leverage massive data to make predictions and build analysis. One of the things we've been lacking in the market in the past is accurate data, but with technology, we are beginning to develop that. Investment technology digitalization, which involves software and tools that enhance investment decisions making, are also very critical. And of course, alternative funding platforms, such as the crowdfunding. The foregoing, ladies and gentlemen, reiterates the earlier point that we are living in a constantly changing market. Also, both the regulator and the operators are affected by this dynamism, and both have equally responded. On market regulations and development, which is one of the key functions of the Securities and Exchange Commission, we are committed to continue developing the Nigerian Capital Market Master Plan, the 10-year master plan, which, since we came on board, we took the oath of faithfully implementing the master plan. Because what we have realized in our country is we are not lacking documents, we are not lacking plans, but what we are lacking is the faithful implementations of those plans. And some of the things we've done in terms of the implementation of the master plan is the electronic dividend. The e-dividend initiative is very central. Recently, the SEC has embarked on a massive media campaign to sensitize the public on the need to get a role on the e-dividend. And one of the beauties of being a role into the e-dividend is not only for the shareholder to collect his or her dividend on due date, but for the shareholder to also collect the past dividends that he or she has not been able to do so.
The Director General of the Securities and Exchange Commission, Mr. Gwarzo, there. Now let's move on to the markets and look at how the numbers crunched this week. Starting off with the NASD OTC markets, that's the unlisted securities market. We have the USI decelerating from 613.43 points by 1.6% to 603.34 points. The market's value, the total market value, which is known as the market capitalization, also crunched from 415.12 billion naira to 408.30 billion naira. We saw that contraction there as the volume and deals as well as value for the year to date standard all of these figures you can see on the screen right there. Let's move on to the fixed income market. Buoyed by the liquidity inflow from the previous week, the Treasury bills market started the week on a positive note with healthy demand observed across the space up till midweek. Overall, Treasury bills moderated 21 basis points week on week, pointing to an all-encompassing bullish performance for the week. And that's why we have the Treasury bills markets numbers coming from the FMDQ OTC Securities Exchange, giving us a total deal of 469 and total value of 125.72 billion naira. However, on the flip side, we've got bonds starting the week on a quiet note, but buying sentiment, buying activities picked up on Tuesday following the Senate's approval of the $5.5 billion Eurobond loan, and that brings the bonds market at the FMDQ OTC, which is the secondary market, to a total deal of 18 with total market value of 2.20 billion naira for yesterday, Friday. the 17th of November. Grand total, which is of grand total of all the activities in terms of treasury bills and bonds, came in at 127.92 billion naira. For the equities markets, all share index also decelerated 1.12% to 36,703.58, with markets capitalization narrowing by 0.57% to 12.774 trillion naira. Whopping 2.804 billion units of shares were traded, and total value came in at 54.776 billion naira, all this week in 17,792 deals. For the sectoral indices, we've got the banking index doing negative by 1.29%. Insurance index also dropped 1.98% despite the insurance committee meeting that held this week, and the Nigerian Content Development Monitoring Board posing the opportunities that we have now in the Nigerian oil and gas sector to the insurance operators to see how they can optimize the total market value of oil and gas sector. The only sector that did well this week is the oil and gas index. Incidentally, that went up marginally by 0.85%. For the top gainers, we've got AG Leventis as the best performer for this week, inching higher at 27.27%, and it's followed by Forte Oil, which did 10.25% increase in terms of market price. BSA gases came next, 9.88%, very close to Forte Oil. For the total, for the top losers, we've got Kevatin, Linkage Assurance, as well as CNI Leasing, all dropping with those numbers, by those numbers, 21.43% for Kevatin and 17.65% for Linkage Assurance, 13.77% for CNI Leasing. Capital market continues shortly after this break.